Okay guys, so in this video I'm going to be teaching you how to get sniper entries and sniper exits. What does a sniper entry mean? A sniper entry means when you're entering the best possible price. You're entering at the cheapest price. You're entering where the move takes place almost instantly. So as soon as you enter, you're either holding very minimal drawdown or no drawdown and you get straight into profit. It's very rare. It's very difficult to hold no drawdown. Okay, but I'm going to show you how to have very minimal drawdown and get into profit straight away, basically. Okay, it doesn't happen all the time, but the more and more you practice, the more sniper entries you'll be able to get. Okay, so right now we're on US 30. Should we do US 30? Okay, let's do US 30. We're in bar replay mode. What can I already see? I can see a trend line going on. What do I believe this means? I believe this means that retail traders are seeing this as a buying opportunity. Okay, so what happens is price breaks. Amazing. We are waiting to see what happens. Okay, that was a spring. Okay, so that was the spring from the Wyckoff accumulation, and now we understand what we're waiting for next. We are waiting for a change of character. Sorry, that previous one wasn't a spring. This was the spring right here. So now we are waiting for a change of character. What is the change of character? This area right here. We're waiting for price to go above and then print a demand zone. Okay, boom, price closes above. Where's our demand zone? We're on the H4 time frame, so we're looking to enter from here. Why? Because over here is where price change character. We'll label this as CHOC. Sometimes we call it CHOC. My guy calls it CHOC. Shout out Saleh. Okay, we'll go down to 3 hour time frame. Now we're trying to refine the area. We are trying our best to refine the area to find a clean order block. Lovely. What can we see here? We can see a lovely order block printed right here. So this is where I'm looking to enter the trade. I'm looking to buy the trade right here and hopefully get a sniper entry that moves into profit straight away. Okay, and where am I going to target? Let's go back to the H4 time frame. I saw an area of imbalance. See guys, whenever there's a fast move in the market, price must come back to fill it. But first of all, what we're going to do is we are going to take partial profits at this first level here. So this is our first take profit. Remember guys, I always said how to identify take profit levels. Your first take profit, always have multiple take profits. Okay, your first one, you take partial profits at a level of liquidity, which in this case is here at these highs right here. You take off maybe, let's say 70%, and you let the remaining 30% run, because when price comes here, there's a high possibility you can also reverse from here. Okay, but because of this imbalance from where, remember we said you draw it from the wick to wick, right? There's an imbalance right here. Price can come and touch this. It can fill 50% or it can fill the entire imbalance. Just to be safe, we are going to take profit. We are going to take profit at a touch of the imbalance. So we have 2 positions running. So we have 1 position running. The first take profit is here, and then our next take profit is going to be up here. Instead of putting 2 positions, let me just mark this out. Okay, let me mark it out as TP1, take profit 1, TP1, and TP2. TP2. So now we're expecting, remember we said guys, well, we're expecting, so smart money sold and sacrificed their positions here. Change of character, they push price away. So now they have to come back into the area to come out of their negative positions, to come out of drawdown, to come out of minus, in order for the buy to take place. So let's see what happens. Okay, we got stopped out there, which is my fault because I drew the supply zone wrong. Okay, I actually ignored another zone here, so no problem. We are down 1R, and guys, we haven't lost a trade in this entire course so far. So this is the first trade we've lost, which is surprising. Surprisingly good, as in I'm surprised I didn't lose any more trades, even though we're just back testing. But cool, here. Okay, this is where I was meant to draw it from, this entire level here. Okay, ideally I would scale in even more. Let's go to the H1 time frame. Let's delete that because we lost that trade. So that's fine. Let's look. What can we see? Perfect. We can see this level of supply right here. We would enter the trade here again after being stopped out, and then we would place our stop loss below. And guys, one thing I want to highlight is the importance of risk management. Because we only risked 1% on our previous trade that we lost, we can now afford to enter again. Okay, we can now afford to enter again. So our first take profit now is going to be here at TP1, and our second take profit is going to be at TP2. And now there's enough liquidity in the market for the market to just hit our take profit, hopefully. Yeah, let's see. Let's go. Okay, TP1 hit, TP2 hit, and that is, I'm happy I lost that first trade, because that is a prime example, guys. Look, let's say I was on a 200k account. 1% is a 2k loss. Okay, so because it hit our stop loss, we only lost 2k. But because it hit our take profit, guys, we entered the trade again off of a valid demand zone. We've now made 20k just from that trade. You see, you're risking 2k to make 20k, which is why I always say risk to reward over win rate. A lot of traders are just focused on, you know, becoming profitable every trade, because they're entering one-to-one trades that are very easy. If I was to enter one-to-one trades, I don't think I would lose a trade. Why? Because it's very easy to enter one-to-one trades. Okay, you have a big stop loss, you're just waiting to go back into profit, and then you close whenever you see blue. No, guys, this is why we say risk to reward over high win rate, because you can take 10 trades, you can lose 9. The one that you win will make back all the 9 losses plus profit. And that is a prime example of how to get a sniper entry. And let's see if it's a sniper exit. So we took profit at an imbalance, so now we're expecting price to drop. So we got out at the perfect time. Let's see if price drops from here. Waiting, and price drops from here. And that is what you call a sniper exit. Okay, although we lost the first one, that's how to get a sniper entry and a sniper exit. The sniper exit worked, the first sniper entry didn't work, but the second sniper entry worked. And I'm glad that you guys were able to see a loss, because this is the nature of the market. You will take losses. It's just about how you adapt to it. You can't let it affect your psychology. You always have to wait for a perfect sell, as in don't revenge trade. Because you lost, you don't just enter back in the market with no actual reason to. Wait for a valid reason to enter back into the market. Always execute your edge. Your edge is what? High risk to reward, right? You have to keep entering based off of what you see, based off your strategy, not based off your desires. Okay? So execute your edge and you will eventually become profitable, and you'll get sniper entries, guys. You can't be scared of the market hitting your stop loss and being scared to enter again. You got to develop that thick skin in the market and enter when you see a real opportunity. And that's it for sniper entries and sniper exits, and I'll catch you guys in the next lesson.